Hello, good afternoon. It's Adil Fazal here, market analyst at cfds.com. Be sure to visit www.cfds.com for your trading needs. Alternatively, you can visit the educational site, which is www.cfds.education. And now there is a new app that's out where the analysis gets sent via the app, which is obviously mobile friendly, user friendly. And be sure to download that from the App Store or Play Store, and it's called Trade Signal. Okay, let's try and decipher exactly what's happened here. I gave a morning video explaining that we are going to see weakness in European markets based on a euro rally, which obviously is the anti-QE trade or a reversal of the QE trade, i.e. weaker euro, stronger equities via exports, via the currency debauchery, etc. And now that's exactly what's occurred. Okay, so we've seen the DAX down 1%, the CAC down 0.8%, etc., etc. Currently sitting at 120 odd points at the moment for the week, so far so good. But I did get caught out on the Aussie short, so currently short the Aussie again, and I'm actually long the euro at present, and I also have other shorts on as well on the Nasdaq and the FTSE. I'm short as well. Okay, so I'll discuss this in depth and see exactly what's going to occur here. Okay, so basically the chronology of events. I think I did discuss in the morning that the Asian markets were higher, given the fact that Chinese data certainly beat expectations to a large extent and wasn't as bad as everybody expected, and the growth concerns, etc., were not obviously apparent. Then we had the economic data out from Germany and Europe, obviously stronger economic data overall. Then we had two camps. The one camp is that we have strong economic data, which means stronger fundamentals, i.e. stock market goes higher. We have the other camp, which is a stimulus stroke QE camp, and they basically start to get concerned. Why? Because you have the DAX up quite substantially already. Okay, so if you look at the actual German DAX, it's more of a buy the rumor, sell the fact type event, where the German DAX from the pivot low at 9,400 is up to almost 11,400. We're up almost 2,000 to 3,000 points. So up by 2,000 points. So since the pivot low in October. Obviously, the markets have baked in all the QE, etc., etc., and all of a sudden, the economic data is now starting to come out stronger than expected. And given the fact that the euro has been butchered as well, if I bring up the chart on the euro USD, I showed you a daily chart of the euro USD, a falling, contracting wedge pattern, and that's exactly what you're observing there. Now, obviously, we've had weaker US data in terms of the economic data today. Out in the US has been considerably weaker. I mean, we had weak economic data yesterday, and now we have another barrage of weaker data. Although, having said that, the Red Book data certainly did come out stronger than expected, but it was the market manufacturing PMI data that was a concern. ISM prices paid was a concern. ISM manufacturing PMI was a concern. Construction spending was double the previous amount, so there's no real concerns there. But overall, that was the concern. Okay, so that was a risk-off type scenario and risk-off type event, especially with regards to ISM prices paid and obviously the manufacturing PMI and obviously the ISM PMI as well. So certainly a concern to a large extent. Now, I think the most important aspect was with regards to the euro. Now, individuals obviously have been buying the market in anticipation of Mr. Draghi doing QE, and that's no longer the case because inflation readings have started to come out stronger. And even though commodities haven't really bounced, with oil still languishing at $40, and copper is making some type of base. Okay, so certainly a lot of arguments there for a move lower. Okay, now we also had the concern, we had this bomb blast in Turkey. Now so far, the news flow at present puts the amount or individuals injured down to, I think it's 5. The metro blast in Istanbul. So again, that raises geopolitical concerns again, okay? And that's certainly considered to be a risk-off type event, and that certainly sent the markets into a frenzy as well. Now, the Nikkei certainly is into resistance. The Shanghai still remains weak, and we have the euro starting to move higher, given the fact that we have the bonds. If I bring up the chart of the bond market, you'll see that they are putting in a double top. If I've got that here, no, I don't have that here. Let me just show you that, bring that up for you as well. And that generally does signify, obviously given the inverse relationship, it does signify a potential pivot low in the actual euro USD. So bear with me. Okay, so you can clearly see there in the daily chart you've put in a potential pivot top here. Okay, and you are looking at a potential pivot low on the euro USD. If the euro USD starts to move higher, we all know what's going to happen next. Yes, certainly correct. You are going to see a move, obviously lower, or shall we say a move higher in the Euro USD, and obviously that will cause the equity markets to fall. Okay, so weaker US data, generally speaking. You have stronger European data. The divergence trade is no longer the case. It certainly seems to be reversing, and a higher euro is basically what's underpinning this market at present, or a movement in the euro is really the foundation in this market. So as soon as we see the euro starting to move higher, the whole trade is reversed. Okay, now looking at the US markets, let's bring up the Nasdaq itself. You can see on the Nasdaq itself, the daily chart, you are still obviously holding that diagonal trend line. The 60-minute chart, if you zoom in, you can see that we are still holding that gap fill resistance at 47.07. So the market certainly seems to be holding and is failing to move higher. Also with regards to the S&P 500, you can see on the S&P as well, same sort of scenario. You close the gap at the 2100 level, and we've seen weakness ever since. Okay, the daily chart is still holding the fib 75%, so therefore the US markets are certainly trading and languishing. Now also bear in mind that the German DAX was down by almost 1% today, so therefore that is a bearish obviously argument as well in terms of the market move. So this is quite interesting going forward as to which way this market wants to go. Okay, now let's try and decipher exactly where we are from a technical point of view, and then we'll certainly start to look at other markets too. Now, on the daily chart, on the German DAX, you have a bearish engulfing candle. You do have that diagonal trend line that certainly has held, which I explained in my video this morning. That would hold, and it has held for quite a few days now. Each time the market hits that upper diagonal trend line, which we call a rising contracting wedge pattern. Okay, so sorry about the I had to pause it there, I had to do something. Okay, so going back to the actual German DAX again, so I'm just going to start again with regards to the technical picture. Okay, German DAX daily chart, obviously bearish engulfing. We approached that gap fill resistance. I did expect that to hold at 11,300. Obviously we surpassed that to 11,430. Markets are markets, they always shoot the key technical levels. You just have to adjust accordingly. Okay, so you have this upward sloping diagonal trend line. You have this rising contracting wedge pattern, and it certainly isn't boding well going forward. That's my understanding and my interpretation thus far. 60-minute chart of the German DAX, I did explain to you during the day. I explained to you that we had this bearish engulfing candle, and we had a bear flag formation, and we would obviously hit this 11,250, and that's exactly where we've arrived. Okay, so market has sold off as forecast. Now, the pattern that seems to be playing out in the German DAX at present is a classical HNS. This is your head, obviously. You're looking at a right shoulder thrust, and then down we go. Okay, you do have an unfilled gap below at 10,700. Now that may well be the sell-off that occurs, given the given the fact that Mr. Draghi fails to certainly please everyone in terms of obviously enacting QE, etc., etc. So disappointment trade basically. Okay, that's how we can interpret that and how we can attribute it to. So the disappointment trade. Now, for now, be open to the potential of a HNS formation on the German DAX, or be open to just a vertical flush lower. Okay, if the market sells off, then you are looking at 11,150 support. Obviously, previous resistance equals support. If obviously we fall further, then you have this 200 MA at 11,000. Okay, that's going to be getting flushed into. Okay, so the 10-minute chart of the German DAX, yes, we do have support at this region, 11,250. You have an unfilled gap below at 11,170, so remain open to that. Okay, now in terms of the German DAX, you can clearly see that we do have this HNS formation as the actual German DAX itself. So your left shoulder obviously there, double top head, we put in a right shoulder, and obviously down we went. You're looking at the head being at 11,430, sorry. The neckline 11,340. So you're looking for a 100 point drop, and that's exactly what we've obviously achieved with the 11,240 sell-off. So that certainly is a possibility and a potential obviously candidate, and that, obviously that has occurred. Now again, you are vulnerable to further sell-off given the fact that the Euro USD is certainly building some type of base and is looking to push higher. If they continue to break out that falling contracting wedge on the Euro USD, again I bring up the chart, the daily chart of the Euro USD, you can certainly see that you have a bullish engulfing candle and a potential breakout, given the fact that we have stronger economic data out of the Eurozone today, which obviously negates the need or a possibility of further QE. The Euro itself has certainly broke out. You are looking for any potential retrace of the buy from my perspective, and we are looking for a potential thrust higher. 4-hour chart again, broken out lower lows and lower highs. and you do have the argument here now. And this is quite interesting given the fact that it corresponds with the German DAX. So when the German DAX bounces off the 11,250 level to create the right shoulder, or should I say the 11,250 level to create the right shoulder, the Euro USD is creating a right shoulder too. So Euro USD obviously falls lower here, tests to say 1.06 level. DAX certainly inflates higher based on the weakness in the euro, and off we go to the races on this right shoulder, and obviously the German DAX then continues to fall, and that obviously creates the next lower low. Okay, so that certainly is interesting. Like I said, the German DAX or European indices are absolute inverse of the Euro USD. Okay, so now let's have a look at the Euro Stocks itself. Again, you're into that 200 MA. The Euro Stocks weakness is confirmed by two other indices. Number one, the S&P 350 or S&P Europe 350. As you can see here, we're holding that 200 MA resistance, previous support equals resistance, and that's one of the reasons why I projected weakness on the European stocks, led by mainly the euro. Okay. Also, if you look at the stock 600, again, that's an important indices, and you can see that you have an upper diagonal trend line resistance, and you have the 200 MA resistance as well. So again, that certainly creates a drag on European indices. So again, another reason or a potential variable for a market sell-off. Okay, now Euro stocks, looking at it from a micro level, going to a 60-minute chart. Again, you have exhaustion, no higher highs or no real considerable higher highs, and you do have the argument here for a potential HNS too. So your left shoulder here, obviously we're putting the head here. Any little small bounce from here will create your right shoulder, and we are holding previous resistance equal support for now. Any disappointment from Mr. Draghi, and obviously this market gets flushed. Bear in mind we have 3360, we have gap fill at 3360, and we're certainly going to remain open to that. Okay, now in terms of the MDAX as well, interesting just to cross-reference, you can see that we're holding that resistance zone on the daily chart on the MDAX. Looking at the tech all share, you can see we've had quite a flush, and that will lead to a flush in the Nasdaq today. That's my expectations. So you are looking for a bearish engulfing candle at horizontal resistance on the German DAX. This is the tech all. Looking at the volatility index, this is always interesting to observe. You can see that we have been putting in bottoming tails, looking for a potential thrust higher on the CAC volatility index, the V stocks as well. If you look at the daily chart, and this is going to be interesting whether or not we can continue to move higher to 25, 26, and that will obviously led by the European weakness. Okay, now French CAC itself. Let's just bring up the French CAC now. Going to a daily chart, you can see that we've put another bearish candle in at the resistance zone. Looking at the 60-minute chart, you can see that we are again indicating weakness and showing a failure or lack of follow through to the upside past the 4960 level, and therefore looking for potential lower low and lower high. Again, on the French CAC, you can clearly see that we have this HNS formation now. Your left shoulder is here. Obviously, you've put in the head, and now you're looking for a potential retracement, and down we go. So again, the French CAC certainly is under a lot of pressure at this juncture. So it'll be very interesting to observe and see exactly which way this market moves going forward. Okay, again, HNS formation, very bearish in terms of the French CAC itself. Looking at the FTSE 100 weekly chart, still stuck at that 200 MA, still battling in terms of the movements higher or lower. Daily chart, again, still holding that diagonal trend line resistance, so therefore bearish. Looking at a 60-minute chart, still holding horizontal resistance, and it certainly is bearish as well. Now, you can certainly argue there's a potential hanging man candle there, and looking for potential weakness and reversal. 10 minutes chart, you have the Great Wall of China at 6400, and that certainly will remain as potential resistance for the FTSE 100 going forward. Okay, I think that's a market wrap in terms of the summation of the DAX, the CAC, Euro stocks, and the FTSE. Again, it's all about the euro. If the euro continues to thrust higher, makes new highs, then you are looking for further weakness in European markets. So, again, safe trading, and be sure to visit cfds.com for your trading needs. Goodbye now.